The U.S. has now logged 2 consecutive quarters of contraction in its economy. So that, by definition, would be a recession, although it has not been called that as yet. What would the impact be for us out here in Asia?
So I think, I won't go quite so much into a technical recession or not in the US. I think we'll probably, or at least our call is that we'll probably more see recession in 23 rather than right now. But I think the prospects that global growth is slowing down is very obvious now in global assets. Asia is obviously very levered to a global trade world. And I think very immediately, the two things which matter here is, one, the export cycle in Asia comes a lot more under threat as growth slows down, and that complicates decision making in this part of the world, and particularly so for the more externally exposed economies. So, for example, North Asia, which tends to have trade as a larger part of its economy and what is driving the cycle right now. And two, I think it also puts Asia's policy tightening, which has obviously lagged the rest of the world, more in context, because Asia needs to be able to get through a larger part of its tightening, but its window might be narrowing as the developed market central banks kind of get closer to the peak of their own cycles. We're probably still a couple of quarters away, but closer than where Asia is.
Now, the U.S. markets have seen quite the run-up, with the NASDAQ up 9% last month. We had the S&P up more than 12%. Do you expect this outperformance to continue?
Look, I think at the moment, global risk assets are essentially responding to the idea that the Fed's shift to data dependence is in some form pivoting away from their focus on inflation. We don't necessarily agree. I think it should not be read as the Fed moving away from its commitment to inflation or even signaling a near-term pause. Is it recalibrating its guidance about how far it has to go and how fast it has to go? Possibly, but to our mind, we are still potentially 150, 175 basis points away from peak rates. Now, repricing to shallower and quicker tightening cycles in the US has led to the same in emerging markets in Asia as well. But again, Asia is sort of further behind in the US in terms of its tightening. So it's got longer to go. And that's where it gets more complicated between growth slowing down and a lot more tightening still to come in Asia, where Asian assets could end up probably potentially more underperforming.